As part of its commitment to developing capital market space in Nigeria and Africa, the Nigeria Stock Exchange hosted the Exchange Traded Fund Workshop 2016. In his opening remarks, the CEO of the NSE, Mr. Oscar Onyema, shared the essence of hosting the forum.
This workshop has been organized to create awareness of the product, address its challenges, and promote its opportunities in Nigeria and Africa.
In his presentation on the fundamentals of market indices, Mr. Garrett Allison, Executive Director, MSCI, shared the characteristics of market indices and asset classes in the ETFs and also the pillars that drive them.
So when we look at indexes, what characteristics must they have to fulfill those roles that we've just spoken about? They need to be complete. They need to have a broad exposure to the asset classes you want covered, and within them they need to give broad exposure to that asset class. They need to cover the assets that you are investing in. Secondly, and really important, is they need to be investable and replicable. What I mean by that is the access to the underlying securities must be available to the market. There must be sufficient liquidity, and there must not be too many investment restrictions depending on what type of investor you might be. Third, you need transparency. As an investor, you need to understand what are the rules, the principles, how is this index governed, how does it come up with the result that I'm looking at. Fourth, extremely important, accuracy and completeness of data. You need to be sure that historical data is available, especially if you're doing asset allocation exercises, performance measurement exercises. You need the reliability and accessibility of that data through time. So we talk about accurate and objective, replicable, investable, must be cost effective, fair to all investors, also current and reliable. That in itself means you've got to have certain pillars available underneath that to make these work. First is robust governance, a proper committee structure, a proper set of rules by which the index is governed. Secondly, you need to have an advanced methodology, quality data. Within that, the indexes need to be defined, constructed, the methodology needs to be open to all and easily understood. We can't hide behind too many formulas, otherwise the retail investors sometimes will not understand the idea behind the index.
After her presentation on the dynamics of exchange-traded products, Nerina Visa, ETF strategist and advisor, entertained questions on the acceptability of ETFs in Africa and also the access to growing this market.
Someone wants to know what the acceptance level is for these products compared to traditional equities.
Okay. I think like many other parts of the world, also in South Africa, the proportion of assets that are invested in ETPs is still a drop in the ocean. It's still significantly less than traditional managed money. You know, even when we look at the US, that is as big as it is, and in the US since 2008, there has been net more money flowing into exchange traded products than there are that goes into actively managed products. So we've already had 8 years of more money going into exchange traded funds, so new money going into exchange traded funds than the money that goes, and there's a net outflow from actively managed funds. And despite that, it still represents less than 10% of the overall investment market. So it shows you the extent to which this still needs to catch up and still change. So exchange traded products are still a relatively small part of most markets, including South Africa as well. Where we are definitely seeing much better acceptance is for a couple of things. So the first one on the institutional side is providing investors access to things that they otherwise can't hold easily, like, for example, physical commodities. So the new gold ETF and the platinum and the palladium and so on, also very successful in South Africa, because even for institutional investors, they don't have another means to actually invest in physical commodities. But the other one that also works very, very well is to provide access to international markets. And I think the retail investors see this in particular, because for them the choice is either to trade or to go to a fund manager or fund house and buy quite an expensively managed international portfolio with all of the costs associated with that, or they can buy an international ETF on the Johannesburg Stock Exchange in Rand terms, and therefore at the cost base they would normally invest on the JSE. So the cost benefit of those for the retail investor is also huge. And I think then the final thing that also has really assisted in the development of the South African market is just that generally globally we are dealing with probably, let's call it single-digit returns. I like to refer to it as low-tide conditions. So what we're really looking at there is that returns on investments around the world is below 10%. So, when you are able to generate 20 or 30% returns on an investment, then paying 3 or 4 or 5% in terms of costs is not so bad. You can deal with it because there's enough return to go around. But if your investment is only giving you 8 or 9% return, then you can't justify paying 3, 4 or 5% costs to it. And so the drive for lower cost and more transparent investment products is certainly fueling a lot of the general acceptance that we have in the South African market. Having said that, I think what is absolutely critical behind all of this is your distribution channel, your dissemination model. So in South Africa, the majority of assets are invested via the so-called LISP platforms, Linked Investment Service Provider platforms. And really what that means is that's the main conduit for money to go from investors into investment funds. And those platforms are owned and managed by the large active management houses. So they have got almost a disincentive to make ETFs readily available via those platforms. And as long as your gatekeepers in the market of money flows don't really allow sufficient flow to exchange traded products, you will find that it's very difficult to really grow the market meaningful. That's why I mentioned in terms of future development, how important it is to look at your distribution model within your market. How does money currently go from the investor or from the asset owner to the investment fund manager? Because it's that bottleneck or that conduit really that needs to be addressed.
Mr. Garrett Allison and the CEO of Nigerian Stock Exchange, Mr. Oscar Nyema, speak further on the partnership of NSE, MSCI, SI, on the ETFs, and also the growth of ETFs in Nigeria and prospect for deepening its index and liquidity.
The MSCI partnership with the NSE is one about bringing both our expertise. As I said, MSCI's expertise in creating transparent, investable, replicable indexes that are then used by investors and exchanges to create product to help grow the investor base within that country. So when we talk about our partnership with the Nigerian Stock Exchange, we're looking to bring some of the expertise to provide that core solid base, initially of market cap indexes, to allow the investors, the ETFs, the institutions and retail investors access to the market with products that are lower cost to the investors.
The way we've structured ETFs in Nigeria, we've actually listed ETFs with liquidity providers. The liquidity providers have added a lot of value in terms of making sure that when you want to buy, they're there to sell to you, or when you want to sell, they're there to buy from you at the market price. That has helped in growing ETF business. We launched our ETF business in 2011 with 285 million naira. Today, that has grown to a little of 4 billion naira. That is 1,900% increase over that period of time. So we've been very successful with our ETF business, especially in the context of Africa, where I believe right now we're the second largest exchange with regards to ETFs after South Africa. In the ETF asset class, what they call ETPs, exchange traded products, you also have synthetic ETFs, which we haven't even done yet. You have leveraged ETFs, which we're not going into yet. So the growth potential is huge. I mean, from a global perspective, from 2010 to 2016, the ETF asset class has grown from $1 trillion to over $3 trillion. And so if you look at that trajectory and looking at the most advanced ETF market, which is the US, where the new funds that are new money is going into funds, are actually going more into ETFs than your traditional actively managed funds, it gives you an idea of the growth potential here in Nigeria.
If you look at Nigeria 4 years ago and to where it is now, you've seen a significant progress in that. Where MSCI is coming in is to help deepen that index base on the equity index side. And then through that help drive liquidity, interaction, and hopefully drive that pool of investors in the market.
The exchange-traded funds provide an opportunity for diversification of market products and growing the capital market space in Nigeria and Africa. By hosting the NSE ETF Workshop 2016, it's expected that all key stakeholders will work assiduously to ensure that the ETF drives value for the Nigerian and African capital market space.